Sukai. Maxwell.
All right, I want to just ensure that you can all hear me clearly. Please just show me by
Maxwell,
you're able to hear me. All right, thank you very much for the silence. I just want to take this opportunity to welcome each and every one of you that has made time to join us in our sensitization today. Indeed, we are scheduled to have a very informative session. Thank you to everyone who joined. I see we are joining in by the numbers. Kana, Wasike, Mohammed, the likes of Adawo, Amadi. I'm just looking through your names and appreciating you who's made time to join in. Harriet is here, Helen Oyomba, Hilda Muturi. I see the likes of Irene Wanjiko, Isaac, Dr. Mboro. Now, we are just about to start. I want to give very few minutes for those that have not yet joined in to join in. I would like to give an opportunity for those with questions. Yeah. If you have questions regarding the Finance Act, and in particular today, we'll be talking about pay matters to do with the housing levy. Kindly post your questions on the chat box so that we'll be able to pick them up from there. In a short while, I'll be introducing the panelists of the day, and then we will get started with the business of the day. So kindly just post your questions on the chat box so that when we get started, our panelists will be able to pick them up, invite those that do not need to be in this sensitization so that we can get to learn together. All right, I want to take this opportunity to appreciate everyone that has made time to join into today's session. I want to start us off with a word of prayer. So I'll ask us to quickly pray. Dear Heavenly Father, even as we are gathered today to begin our sensitization, we want to commit this session into your hands and pray that it shall be informative and helpful, even to everyone that has joined in to listen, let us learn, and guide us through from the beginning to the end. In Jesus' name we have prayed. Amen. All right, thank you so much. I see the questions coming in, and I'll be going through them in a short while. But first and foremost, I want to introduce our panelists for today. We have very able panelists, and I will be reading out their profiles for you so that you know exactly who we are dealing with. And then I invite them to their opening remarks. So then I will begin with our very first panelist for the day. He's not new to most of us. You must have either seen him or heard about him. He's a business process improvement specialist for compliance management and external integrations in the Business Transformation Office that is found under Domestic Department. He's an assistant manager right here at the Kenya Revenue Office. That is none other than our very own David Busaule. So I just want to give David an opportunity to reach us and give his opening remarks. David, you can hear us? Yes, we can hear you. Karibu sana.
Morning, Brenda. You can hear me?
Yes, we can hear you loud and clear.
Greetings from Bundus. Anyway, my name is David Busaule. I think I've been introduced, and I'm looking forward to have a wonderful engagement with all of you. I'll be taking you through the iTax bit of the housing levy, and probably contribute to other conversations together with my other panelists. Thank you very much and welcome. Okay.
Thank you so much, David. I also want to go ahead and also introduce our second panelist for the day. Now, our second panelist is a partner at Ichiban Tax and Business Advisory LLP. He has over 19 years tax experience, including international experience in advising local and multinational corporations on tax and regulatory matters. That is, including transfer pricing, having worked with the likes of KPMG LLP, the Chicago office. Now, Robert is an advocate of the High Court of Kenya. He's also a member of the Institute of Certified Public Accountants, that is ISPAC. He's also a member of the Law Society of Kenya. Now, Robert is also a fellow of the Institute of Certified Public Accountants of Kenya, that is FCPA. And currently, he's serving as the chairman of ISPAC's Public Finance Committee. Ladies and gentlemen, let's put our hands together. I know we have that emoji for one Robert CPA, pardon me, Robert A. Wariro. Robert, wherever you are, you can hear us?
Yes, Brenda, please confirm you can hear me.
Very clearly, loud and clear. Please proceed and give us your opening remarks, and karibu sana.
Asante sana, Brenda, and good morning, all our participants. It's such a pleasure to be here once again to have a conversation around this evolving tax obligations. Brenda, I can see we've got over 500 participants. This is such good news because it's important that we all understand what the obligations are so that as much as possible, we try and comply with the law and avoid the penalties and interest. So just like David, I want to welcome you to this forum. We look forward to the interactions. I can see a lot of questions. I think there are already over 100 comments and questions. So we'll definitely be diving into that. Thank you very much. And back to you, Brenda.
Thank you so much, Robert. It's a pleasure to have you here. I know some people might have seen you on some media stations, but let me not mention that here. to now welcome our third panelist of the day, and it's an honor to have her here in this meeting. Let me just introduce her. We are gender sensitive, so the person I'm just about to introduce is currently the Chief Manager, Budget and Technical Support under the corporate policy, that is at the Kenya Revenue Authority. It's a position that she has held since February, that is the year 2021. Now, our panelist today is a member of the National Budget Committee and engages players such as the National Treasury and the Parliamentary Committee on Finance and National Planning by contributing to significant national tax policy matters. Now, most notably is the finance bill and subsidiary legislation making process. Participated in a number of policy review processes over the years. He also participated, or rather participates in international policy matters with organizations such as the OECD, ATAF, the United Nations, on conversation around tax policy. I want to, let me mention, joining the corporate policy, he worked still on that DTD, that is Domestic Department, for slightly over 16 years. And she has worked in various departments. She's worked in audit, compliance, real estate, tax-based expansion, taxpayer services. She's been in policy and tax advisory, in addition to being a tax trainer at the Kenya School of Revenue Administration, which we call STRA. Now, ladies and gentlemen, please help me appreciate our panelists, who might be interesting to know that she loves reading and spending time with her family, and her favorite book is Hiding Place by Cory Boom. Mugure. Maybe you will tell us something about the book and why you love it. Karibu sana to our discussion today. Feel free to unmute.
Good morning, everyone. My name is Jasmine Brenda. That was too long, but I'm glad to be here. Yeah, let's do this. Robert, hi, David, and hi, everyone.
All right, thank you so much for saying hi to us. I just want to ask our panelists to keep their mics unmute where possible. Because of management of such vast numbers, I do not want us to have noise in the background. So then I just want to read a few of the questions that we have received, even as we are starting our sensitization today. And I see the questions are varied. I just want to read a few of the questions. Claire, thank you. Okay, Bowen is saying my voice was breaking at some point. I hope you are now able to hear me clearly. Maybe let me get a confirmation that you can hear me clearly.
Much better, but it can also be, you can make it slightly better.
Okay, it can be better. Okay. I'm glad that I have technical support right here. Let me see. I have technical support. How about that, David? Any improvement? Does that sound better? I think it should be better. Okay, Claire is saying that we are okay now. Parita, please give me feedback on how. Yes, Joseph is saying that is better now. Josephine Atieno, thank you, better. ZK Juma is saying that we are better. Okay, let me just do something. I want to increase. Nicholas Murithi, thank you very much. I think it is loud and clear. Nilma, thank you for that clarification. So without wasting too much time, let's get to the order of the business of the day. We are here to discuss the Finance Act 2023. And because we have the Chief Manager Corporate Policy here, before I go over to David Busaule to actually take us through matters to do with the filing for pay as you earn, you know very well that tomorrow is the deadline for filing for pay as you earn, and this month's return is going to be different from prior months, notably because of the changes of the rates in the pay return and also because of the housing levy, something that we shall discuss in a moment. So I want to welcome Josephine Mugure. I know she's been having conversations around the Finance Act and even Finance Bill before it was passed into the Act for quite some time. I want to ask Josephine to briefly just take us through, okay? The Finance Act, not entirely everything, but just key changes that the Act has come with. Josephine, you can hear us?
Yes, I can hear you, Brenda.
All right. Kindly just take us through the key changes that this Act has come with. This is in as far as Kenya Revenue Authority is concerned.
Okay, Brenda, I'll try to go through it quickly, given we don't have much time. But this being basically a payee discussion, then we go through what is affecting payee. The first thing is there is the housing levy, which we, as we saw from the public notice that came from Ministry of Housing, where is effective from the 1st of July 2023. And I know the question will be why 1st July? The cost did not guide on any other day of effectiveness. So we go by what the Act had, which is 1st July 2023. We have the amendment of the rates for people who are earning more than, or from their businesses make more than 500 and above. They're going to pay at 32.5%. And the ones who are earning more than 800 per month are going to pay at 35%. I think those are the two ones that touch on payee. Of course, there are a lot of other good changes, like now for the businesses, for instance, that they can carry forward the forex losses in a year. Where they have interest restriction, they can claim the forex losses up to 5 years. There are others with regard to the interest restriction. We have allowed that any interest that is restricted in a year of income can be carried forward up to 3 years. There is a rate on introduction of repatriation profits, but those ones and all those others really are not relevant for this discussion. But I must mention the one on MRI, that with effect from 1st January 2024, the rate of MRI is going to go down from 10% to 7.5%. And the others I would like to discuss just as they come from the meeting. Perhaps any questions that come up, we will pick them from there.
Fair enough. Thank you so much, Justin, for that very quick overview. Of course, our discussion today is pegged on discussing matters to do with pay as you earn. We will bring in FCPA Robert in a short while, but I want to give this opportunity now to David Busaule to take us in-depthly through the changes in pay as you earn, and also to discuss how to file and pay for, that is the pay taxes and also housing levy. Busaule, I hope from wherever you are, you can be able to take us through.
Yeah. If you hear some noise of some chicken or cows in the background, just know that I'm way deep in the village. But so sorry about that.
Thank you.
Anyway,
thank you.
So I think I'll take you through. Brenda, you can enable me to share. Then I think we go through because the questions are coming fast and furious. And
yes, thank you. You should be able to share now.
Okay.
Is share? Yes.
Okay, I think sharing is there now. I think let me share the screen so that I can easily move from one unit to another.
Yes, your screen is now visible. We can be able to see your screen. Thank
You're able
you.
to see the. I think
Yes,
for the
we are able to
employers,
see the iTax.
the housing levy being one of the we can say it's more of a payroll related deduction, and of course again contribution by the employer, because there's a bit which the employee contributes and the one which an employer matches. It's going to be filed through the pay return. So again, for now, when employers then are filing their pay return, they'd be required to declare housing levy and in the pay return. So the aspect of how to file a pay return, I believe, is already well known to all employers. So we'll just go through. You'll be able to log in to your iTax profile, and of course, go to returns, and under returns, go to file return. So under returns, file return. Okay, just a minute. Ooh, don't know why. So you come to file return, and of course now you select pay as you earn, being the obligation for employers. Just a minute. Just 1 minute. The obligation for employers. Just a minute.
No problem, David. And then as you're working on that, I want to thank everyone for the questions that are streaming in. I want to confirm something, that this particular session is being recorded and it is currently being live streamed on our social pages. The link will be shared shortly. It's on YouTube, that is KRA TV on YouTube, and we will also make it available under KRA TV. Also, we will make it available on the link will be available on our social media pages after this sensitization. So for those of you who want to get a recording of this session, don't worry, you'll be able to get it. You can go to YouTube or send the link to those that might not have been able to attend the sensitization. They can follow this sensitization as it happens online. David, back to you.
Okay. Sorry, so I think we'll just proceed. The employer logs into iTax with their credentials. Okay, 124. So that is it. The same way they file for PAYE, which comes with currently it comes with NITA, is the same way again. Now we are onboarding housing levy in the unified payroll return as a component of the unified payroll return. So currently the unified payroll return will have PAYE component, the housing levy component, and the NITA levy component, because all of them are mandatory statutory deductions, and of course NITA levy is a contribution by the employer on behalf of the employee. So they come to file return, and they select PAYE. Okay, I don't know why. Just a minute. So basically, we just need to download the Excel. I think we can still skip this bit and come back, because this test environment I'm using, since like today it has some issues, but oh, it was accepted. Very good. So it will come. You come and download the Excel, the pay return. So I think I'm sharing my screen. So wherever I move, you'll be able just to see I'm moving. Then I'll download the P10, which is an Excel. Currently, the pay return is still Excel based. So it is still Excel based. So Brenda, I believe the Excel is the one which is visible now.
Yes, it is very visible. We can see it very well from here.
So when you download the Excel return, please enable macro so that the formulas can work well in the pay return, because it has a lot of inbuilt formulas. I'll come and capture my PIN number. I'll come and select the type of return as original. Of course, with the communication from KRA that, and even the State Department, the Ministry of Housing that the effective date is 1st July 2023. Then, of course, for the ones then who need to amend, then you probably have to come and file an amended return and still capture the same pay details which were there in the original return, but now include the aspect of housing. Because I've seen some of the taxpayers, they misunderstand, they confuse the aspect of filing an amended return where they confuse the aspect of filing an amended return where they think an amended return only needs to have new changes. But now for us, you must still reinstate the original return in the exact way it is. Then of course, now you have you come and include now the additional component of the housing levy. Assuming the amended return, the only thing which is changing is the housing levy. So you still import the pay details as they were in the original return, then you come and capture the housing levy, and then you should be able to file. But now for us, we'll continue with the original return going forward. And the entity type, head office, the return period, we can say, because the return period we are currently dealing with is, let's say, probably July. That's for the sake of these sensitization. And then, of course, it's a monthly return. So yeah, so that's basically, of course, you can file as a branch. It's still allowed. You can still file as a branch. And also, you should be able to proceed and pay for housing levy, even because we have like the churches, we have like the organization like KRA, like IBC, they have various branches in all their regions. And now they can always also file as a branch, which is already enabled in iTax. And also they can now proceed to make payments at either at head office or as a branch. So for employee details, allow me to I'll just use one PIN, but of course, this is a bit where you can come and import a CSV of your 60,000 employees at once, probably. And then, of course, now resident status, we are at that point now where you can select the resident status of an employee. Is it resident? Is it non-resident? Of course, you can proceed with that. Then we have either primary or secondary. Of course, all these are for things like NITA levy. It's very straightforward that for NITA levy, both resident and non-resident, primary and secondary, they are all applicable for NITA levy. But now for housing levy, those are some of the discussions which we should probably be having in the Q&A amongst the panelists. But and even as you look at the definition of employment income, who an employee is, then it's a very general definition, and probably we are seeing very few exceptions around that. But anyway, it would be probably for further discussion during the Q&A. So you capture the employee. I just need to capture something so that we proceed. Am I like the CEO of Safaricom? I've given myself 10 million. Okay. Former CEO, I think Olimo was the one. It was public knowledge. I don't know what the current one is currently earning, but let me not say I've divulged. But if the one for Kolimo, I heard it from the news actually that he was earning the former CEO was earning around that. Anyway, I'm dreaming big, so don't it's not a crime to dream. Anyway, so that's the salary of the employee. I'll not go much into, I think, how you file this pay return. You guys already your knowledge in filing is already good enough. So I think I just need to replicate some values so that we can always go and so the first changes I'm going to, of course, you have the NSSF for the ones who has been the NSSF now, which is at maybe tier 1 and tier 2. You can always have that 1080. For the employees, for the employers who are deducting mortgage repayments through the payslip for the employees, they can always purpose to provide that relief They can always purpose to provide that relief in the pay return, so that at the end of the year the employee is not in a refund position. So it's not a crime for as long as you're deducting these mortgage repayments through the payslip and paying directly to the lender, and it's a mortgage which qualifies. You can always refer is it to the 4th schedule, those organizations, qualifying organizations for mortgage. And if some of your employees are having such mortgage arrangements, and again, you can allow the relief, and the return will allow the maximum. Again, you can do the same for will come and capture the monthly relief of this employee, which is 2,400. And again, for the amount of insurance relief, employers can still allow insurance relief relating to the insurance premiums the employees are being deducted through the payslip, and the employer is paying directly to the insurance company, including NHIF. So I think as long as the deduction is being done through the payslip, and even as for KRA, KRA has already adopted some of these, so that you realize some of the KRA employees actually at the end of the year, and it is something which any employer can implement. So for let me use the example of NHIF now that it is a mandatory social health insurance for everyone. This person probably is in the 1,700 category. We are yet to have the new rates implemented. They're still, I believe, under some certain discussions. So it will be 1,700 multiplied by 15%. So you only allow 15% of the insurance premiums paid up to a maximum of 5,000 per month or 60,000 in a year. So you can have that as the NHIF relief of 255, which is 15% of 1,700 for this. And then, of course, now the payee. Of course, now for this example, what has happened in the back end is we've already implemented the new rates. Meaning, probably allow me to you realize for me the pay tax is 3.4 million now for this person, but allow me maybe to change the return period to June, and then probably you will see if there will be a difference. It is about 3,459, so that you can just see how the rates have already been implemented in the back end. Okay. So you come to, let's again come to the, for the July one is at about 3,450,000 something. You realize for June, the pay is now 2.991, but the July one is about 3.4. So for this person who is earning, I think about 400,000, about 400,000 and something, pay has gone up by about 400. So I think those are how the rates have been implemented. We are, for the guys who are earning up to 30%, meaning your salary is less than 500,000 per month, you'll never probably feel these new changes of the pay, because the new changes are only affecting people who are earning above 500,000. And the component between 500 to 800, it's 32.5%, and the component above 800,000 is being taxed at 35%. So for us, the other commoners, me included, we are still in the 30%. That we are not feeling these new rates anyway. So let me change the 3107 2023. So you realize it's at 3 points. So that's a big difference, by the way. It's like a 469,000 change in pay for this person earning 10 million. Anyway, so 3,459, 250. So that is a pay, and then you're good to go. If you have a person with disability, of course, you capture it under sheet C. I think I'll not belabor much on that. Focus of the day is on the sheet M, which is affordable housing levy. And under the affordable housing levy, you will come and now this sheet, the affordable housing levy sheet has always been with this pay return from around 2019. I know most employers are seeing it for the first time, and even we could hear some employers and even some of my friends and other people out there reaching out is like, "You've already put the housing levy sheet. How come it's still capping at 2.5?" Of course, that was the original delivery. What you are seeing in the July return was the original delivery of the housing levy as it was in 2019, where it was still 1.5%. It was more distribution. Max, it was capped at 2,500 for both the employer and the employee, and it was based on the basic salary. So that is the original one. But now, of course, now it has changed, and also even the reason why we're having the ID was back then the contributions we are getting from you, they were feeding into your Boma Yangu. The Boma Yangu portal is the portal for affordable housing. So using the ID, those contributions will feed directly into your account statement in Boma Yangu, and every month your employer deducts and pays housing levy, including the people who are in self-employment who are also allowed to pay probably through the pay bill number, they'll also be able to have their details updated in the statement. So that was the whole reason of having the ID number, the member number being the ID number for that time. But again, even already we are having conversations to see, should we make this ID number not mandatory, and even between the ID number and the PIN, which one? So I think those are some of the things we're even currently dealing with it. So for now, I'll just capture a dummy ID number for this employee. It is mandatory. All these fields are mandatory for now. But I think in the course of the month, we might be making the ID field not mandatory, and probably one or two other things, some small changes again to just make your experience with complying with the housing levy slightly better, even as we have more conversations with the State Department for Housing. So member name, we have you can say maybe that is it. I'll have to, please, the KRA PIN. The KRA PIN is going to be validated. Then, of course, for myself, I think I'd already captured my gross salary. In the other side as a basic, I don't think there is anything about basic. I believe for you guys, the basic salary is grayed out. I'm not sure why my return is still making it open. Some of the changes I think were to make the basic salary grayed out. But basically, anyway, the gross salary, the member contribution housing levy is being charged on the gross salary. And for myself, this example, it is 10 million. And of course, now the member contribution will be 150,000, and also the employer matches the 150. And the total now housing levy is 300,000. So I think nothing much. The sheet is there. The sheet has been there, but of course, some changes were done in the first week. I think around 2nd, is it 1st of August, we updated this. We came up with a new PAYE return, which came up with some few changes, removed the capping, and charged the housing levy on gross salary and not on basic salary. So we go to the tax due sheet. For my example, there's only one employee who is earning that much. I believe for all employers, you already know there is this row 11, we call it pay tax deducted from employees without PIN. So that's where you can come and capture some pay which you deducted from employees due to one reason or another beyond probably your control. You are not able to get their PIN by the time you are filing, but you already deducted the pay. You can always capture pay. But of course, once you get the PIN, we always encourage employers to go back and amend the return and move this amount of pay deducted from employees without PIN to either sheet B or C, where applicable. Then for housing levy, you realize under row 15 of the tax due sheet, the total housing levy contributing members is 1, and the total housing levy contribution. Again, these numbers, these statistics will now start being used by the respective enforcement agency in trying to know if an employer is underpaying or overpaying, rather mostly underpaying a housing levy, because an employer who is having, let's say, 100,000 employees, and for housing levy only 20,000 are there, then of course someone else will start asking questions. How come you're having 100,000 employees, yet only for housing levy you're only paying for 20,000? So we're not saying the numbers cannot be different, but those are some of the quick reports ITAX will be able to generate for the respective enforcement agency to just be able to pick it up and start having conversations with employers on probably why, to just try and understand why the discrepancy between the employees who are liable for housing levy and the ones who are liable for PAYE. Then we come to NITA. Allow me to just capture again on NITA, because for NITA levy, again, NITA levy is a statutory contribution by employers. This one is not a deduction. At least housing levy, there is a deduction from the employee, and there is a further contribution or a matching of the deduction by the employer. For NITA levy, it's purely a contribution by the employer on behalf of the employee for the industrial training levy. For NITA levy, what we've done is, because NITA levy is applicable at the rate of 50 shillings per employee per month, what we've done is that it's applicable to all type of employees, resident and resident, primary, secondary, all of them at once. What we've done is for NITA levy, we've allowed the employers to capture more employees. And this could include casuals, could include interns, could include anyone probably due to one reason or another. You may not have their PIN number, so maybe they have not been captured in sheet B and C. So for NITA levy, we've allowed employers, even if only one employee was declared in sheet B and C, you can edit this amount to even 100. So meaning you can say, as much as we encourage all employers to always ask for the PIN number of the employees and declare the employees in the pay return as whether they're earning above or below, whether they're earning, even if they're earning below 24,000 per month, it is imperative and we encourage employers to declare all those employees in the pay return, because the pay return is a return for anyone you are paying a wage or a salary. And of course, the pay return itself will calculate a zero payee for anyone earning less than 24,000. So it's not that if you bring someone earning 24,000, there will be some tax to pay, because the relief will be just equal to or even more than the payee, which is taxable. So for NITA levy, we've allowed employers to edit the amount upwards, but not downwards. So the minimum amount is the one from sheet B and C, but you can always add different scenarios. So at this point, we are ready to file our unified payroll return, which has the payee component, which has the housing levy component, and which has the NITA liability levy component. So I'll validate the return. Sheets are ready to be uploaded. That's fine. I think I'll go back to for my case, this return period is still at okay. I think I've just been logged out. Let me see if I can get the PIN number. Okay, that's very weird. Let me just log in again. I think the explanation have been logged out. Let me just log in so that we can upload this return as a July return. So I'll log in again. So I think my return periods are slightly behind. So just allow me to bring the return period to July for this example, so that we can upload we can use the example of July as a, because the rates change. For housing levy from June going backwards is different, but for us, I think our focus is now from July. Okay. Let me just see if again. Just a minute. I don't know why. Okay, my network has okay, I don't know what, just give me a moment. I'm not sure why I just needed to upload the return. Okay, am I having just a minute? Yeah, my network is okay. Let me just yeah, my network is fine. Anyway, so at that point, let me just see if I can log in with
Maybe David, as you continue to try to log in, we can pick a few questions.
Okay. Okay, just so that maybe the flow is not interrupted, just allow me maybe just to show how to generate the payment slip, even if then we can now go to the question.
No problem, no problem.
Okay.
No problem.
Even if the test, let me just log in with probably my individual PIN. It's not that I'm an employer, but I should just be able to. So once you upload the return, which has both the unified pay, which is the unified payroll return, which has both the housing levy component and the NITA levy component, what the employer does is, of course, he'll go to payment registration. How you generate the payment slip for payee, I think it's already okay for everyone. So you'll just come and select, because this test environment, I think it's having some issues. So, let me just see if I can. Oh, okay. So you can always come to payment registration once you've uploaded the return. So you'll upload the return with all the components. Then now you'll come to generate a payment slip. Okay, this one is having, let me just go back to the other one. So once, when you come to generate the one for payee, of course, you'll select income tax, then you'll select income tax payee. Please do not you'll have to, for the example I've just shown you, you're going to generate 3 separate payment slips. You're going to generate a payment slip for PAYE, which is separate. You're going to generate a payment slip for housing levy, which is separate. And also you're going to generate a separate payment slip for NITA levy. So there is no editing of the PAYE amount to a higher amount to take care of the other 2. So for PAYE, I think the payment is under income tax PAYE if you have that obligation. For housing levy, you'll come to agency revenue and you'll select housing levy. And of course, you cannot pay for housing levy until you file a PAYE return, which has housing levy liability. So we don't allow you to pay housing levy before filing the return, because you need to file the return, which calculates the housing levy. Then you go and generate a payment slip for housing levy. The same principle applies for NITA levy. We don't allow you to pay NITA levy until you file a PAYE return, especially for the employers with who have a PAYE return. So for housing levy, you'll come and select housing levy, and you'll select the period. I'm just using this as my example because I think the other one probably I'm not sure if it has come back. No. Okay, let me just see. It will be good to finish, but let me just see if because of time, if it's still the test environment is still having issues, we'll just proceed. Okay. So you'll come and select the period, let's say July 2023. Then, for example, when you select July 2023, the system will pull the housing levy details as per the PAYE return, and you'll now be able to pay for the 300,000. You'll have to generate a payment slip for the 300,000 for housing levy separate. Again, once you're done with that, you'll come and select NITA levy, and under NITA levy again, you select July 2023, and the system will pull the 5,000 NITA levy liability. You'll generate another payment slip. How you're going to make the payments, you'll address the checks or any instructions to KRA just like any other taxes, because KRA is the collector of housing levy. KRA is the collector of NITA levy. In our backend, we've already set up our system in such a way that it can communicate to the State Department system and the National Industrial Training Authority systems for the sake of them consuming, because they are the principles of housing levy and NITA levy respectively. So for you just make payment the same way you do for other taxes, and even how you address the checks. You address the checks to KRA or the Commissioner General. I don't know how you're addressing them, but of course, at the end of the day is the payment, the instruction you're using, whether it is RTGS or a check or an EFT or mobile payments, money will be credited on your behalf in iTax relating to either housing levy or NITA levy or even pay as you earn. And in the back end, KRA will pick it up from there and share the details with the respective. Now, for housing levy and NITA levy, because they are agency revenues, we're encouraging you for them. If you want to confirm that the payments have been done, there is no ledger in iTax for agency revenues. So what will happen is you can always come to consult payments, and under consult payments, you can always query you can probably put the date of today or even the date of any August, maybe from 1st August to 31st August. Then when you query, you'll be able to see the PRNs under this section. And when you see the status of the PRN moving from registered to received, if it's now received, it means KRA has received the payment. But of course, iTax also communicates to all employers through their iTax registered email. Once you make payments, KRA will always acknowledge that they have received the payments on that aspect. So I think that's how you confirm. Again, don't go look them in the ledger. You can always confirm by the email sent by iTax, or you can always come to payments and consult payments and be able to confirm that the status of the PRN is received. And I think with that brings us probably to the iTax presentation on just how to file for housing levy and how to make payments for housing levy. Okay, thank you. I'll stop sharing and probably move to the next. Okay.
Thank you so much, David. Let us appreciate David for that presentation. He has taken us through how to file. I hope that you can be able to hear. Duncan Omondi, yes, thank you. I see the hand clap. You should be able to hear us clearly. Thank you, David. Riungu Anthony saying thank you. And David, questions have come up. Yeah, and I want to read them out. We have questions that I will be channeling to yourself, to Robert and also
Okay.
Josephine, who's here. Let me begin with questions to do with pay. There are some taxpayers, like one, let me see, what is the name of this particular taxpayer? Those that had filed their return, yes, like Faith Mano. She says, good morning, I filed our July pay returns yesterday. That is on the 7th of August. And then Faith says, however, the acknowledgement receipt returned with the old tax bands. That is pay without the housing levy. So she's asking, how do I go about this? And you know, now there are several such questions for people who had already filed their pay returns without factoring the housing levy. Maybe you can recap on that. And there's a question asking, how do we amend? Like, if you're able to give a quick tutorial about how to do an amendment. David?
Okay. Thanks, Brenda. I think yes, the ruling by the I don't know, is it ruling judgment? The lawyers know it better. My other two panelists probably. Anyway, that direction from the Court of Appeal came, I think, towards the end of the month. Was it 28th or 29th and of July? And of course, a good number of good employers had already, the good employers in quotes, they close their payrolls very early, including KRA. And of course, now, if they had not factored in the housing levy component, and now the government is coming through both public notices by State Department, or rather the Ministry of Housing and KRA, that the effective date is 1st July. Then you'll need to log into iTax, and you go under the option for file amended return. So under returns menu, there is file amended return. When you go there, you'll enter the return period as July. The system will allow you to download the pay return the way you file it for without housing levy. You'll re-import the CSV for sheet B, C, and probably any other section which you are dealing with. Then you will now go back to sheet M and now probably capture the details for housing levy, import a CSV, or capture the details in one or another, what works for you. Then now you'll file an amended return, and the system will require you to upload any supporting documentation. So you can just upload any letter saying you had filed probably without, before, by the time you are filing, the Finance Act was still suspended, but now you are now amending. And of course, with that, the system will auto approve this amended return, because for iTax, all amended returns whose liability is going upwards, including or remaining the same, the system will always auto approve. So I think once you have already filed the amended return with housing levy, in addition to the payee details, you now proceed to the agency revenue side, and now you generate a payment slip for housing levy, which will be picked from the amended return, and then you proceed to make payments. So that's just the procedure. Okay, on how to go about it.
Thank you, David. Thank you for that. And you're still sharing your screen. I'm just giving you a heads up. I want to thank you for that response. Now I want to bring in FCPA Robert. You have been quiet since we started the sensitization, and we would like to hear your voice. A lot of clarification is being sought by our taxpayers, and I'm grateful that you've been able to go into the chat box and respond to some of them. Robert, you can hear us?
Yes, I can hear you, Brenda.
All right. Now we have questions still on payee and also on the housing levy, but perhaps let me just channel this question to you to do with secondary employees and the new payee tax bands. How does that work? There's a person here who's saying the secondary salary is also deducted. Okay, let me just paraphrase. It says the secondary salary is also deducted under the 35% bracket, yet the salary itself does not get to that particular tax band. So this is the taxpayer seeking clarification. Maybe talk to us about secondary employees and this new payee tax band.
All right, thanks for that, Brenda. And perhaps before I just do that, just when my colleague had talked about the changes, I think two other important changes that came through were, one, the issue of mileage reimbursements. Some of our guests here may have a scenario where they travel for work purposes, and therefore they are reimbursed for that travel cost. Maybe you're driving to Nakuru for work purposes. So when you get reimbursed at AA rates, then that reimbursement is not a taxable benefit. And I think that's an important one, given the environment that you are working on. And then the other one is we may have employees who enjoy certain benefits like club subscriptions, where the employers pay club subscriptions. In the past, both the employer and the employee paid tax on that benefit, but now only one person will be paying tax on that. It's either the employee or the employer. I think that's also a good change that came through. Now, to your question about secondary employees, and I think this is really part of the challenge of the new tax bands that have come in, because prior to these new tax bands, the system presumed that if you're earning a secondary income or you're earning another pay, you have another pay slip, you've got your primary employer where you normally do work, but then you've got another person who is paying you. And this one usually applies to people who are directors in companies, because then you get paid your allowance and so on and so forth. Now, the system assumed that you're already at the top tax rate. And you remember previously, the top tax bracket was at 32,000. You're already at 30%. So it was very easy for the system to just work with 30%. Now, with the new rates, I think and David can confirm this, what I think the system has assumed is that you will hit the highest tax bracket, which is 35%. So you pay the 35%. However, when coming to file your return, assuming you did not hit the 800,000 shilling threshold for purposes of the 35%, then essentially you will have a tax credit. That's the way the system is I think designed to work. And I can see, as a practitioner, I can see why that would be the case, because then leaving it open so that the taxpayer decides whether it's 32% or 35% would probably be a bit more cumbersome to control from a KRA perspective, and even perhaps raising a bit of errors. It just means that I think taxpayers will have credits for those of them who do not get that. Brenda?
Thank you, Robert. I just want to welcome David before I bring in Justin to comment on the matter of secondary employee and this current pay return. David, how, just to weigh in on what Robert has said, how is this current return treating the secondary employees? And maybe for the purpose of clarity, clarify which version of this return which version is it? I've seen a number of questions regarding the version of the return, so you can clarify both. David?
Thanks, Brenda. Of course, when I mute again, you always, you're the chief whip, so you need to always mute anyway. Yes, and I think I like the approach Robert is coming with, because in tax administration we are handling different things. We handle different things, and a return is supposed to probably take care of probably the worst case scenario, and the worst case scenario, okay, in quotes, is you are earning above. Because if you just say, let's assume we use 30%, then what happens to the PSs and the employees who are actually earning above 800,000 and they are sitting in different boards? Because again, it is not the amount you are being paid by a certain employer which will qualify for the 35%. It is the assumption that probably this employer A does not have visibility of all your incomes across the country, including your business income and other things. So the best way again is, because they don't have visibility, then of course it becomes easier to go with the conservative approach of having the 35%. What you've done in iTax, by the way, we've not changed the principle. The principle of secondary employees since iTax started was the secondary employees are always being taxed at the highest tax band. So from 2013 to 2020 to 2020 March, you are being taxed, the secondary employees are being taxed at 30%. From April 2020 to December 2020, they are being taxed at 25% because the highest tax band was at 25. And then, of course, we went back to 30. So the principle of secondary employees has not changed. And even just to weigh in what Robert has said, it's just more of aligning it to the, and where there are repercussions, probably, of course, some people might be in some overpayment position. Again, the final section 47 of the TPA very well. It was added too much meat in the last Finance Act, and it gives the commissioner serious timelines to work with in paying refunds. So again, it's a double-edged sword, I think, on one end. One end, the government might collect slightly more, but also once those taxpayers file the returns and they apply for a refund, the government is also put on the spot to pay refunds in the shortest time possible, or otherwise start incurring the interest. So again, I think for me, I'm looking at it at both. So yes, it may be painful during the year, but again, at the end of the year, the government will be put on the spot to refund probably anyone who might have been overtaxed or that. Okay.
Okay, thank you. I think you are responding to the questions of the likes of, well, they call themselves user, and their question was in line with the same secondary employee. They were asking, is secondary employees to be taxed at a flat rate of 35%? And I think you have responded to that question, and any other person who might have that question. I want to bring in Josephine just to continue with this conversation regarding pay. We want to deal with the elephant in the room, which is the matter to do with the housing levy. Josephine, I think you should be able, let me just check whether your microphone is okay. Yes, I think, yes, you should be okay now. Josephine, you can hear us?
Yes, I can hear you, Brenda. Thank you.
You're welcome. I know we have a short time with you, so
Yeah.
I just wanted to ask, a number of questions have come up regarding the matter to do with housing levy, and I just want to read them out as they are. So let me just begin from here. So the questions that we have received: for the purpose of housing levy, kindly confirm what composes of gross salary. One, does it include non-cash benefits? Let me read a few more questions. Number two, there's a question here by Maria who's asking, what does gross monthly salary comprise of? I think it's the same question in terms of computing housing levy. Does it include non-cash benefits and other irregular payments such as bonuses? Another question still on housing levy that has come in. This is a question by Kimberly. How are we supposed to contribute to housing levy? Sam is asking, if a staff is paying mortgage, then are they exempt from payment of housing levy? And a last question, so that I give you an opportunity to respond. Casuals, do they have to contribute to housing levy? I think, let me see. Last question, yes, because they are similar. Louise, this is Lois Makara saying, is housing levy a mandatory contribution to NGO organizations that are exempt from direct taxes and levies? Similar question, Guni saying, what constitutes non-cash benefits in computation of housing levy, especially on employer pension contribution? I think the questions are more or less similar in terms of housing levy. I want to give you an opportunity just to comment on that, Jocelyn.
Thank you very much, Brenda. And thank you for your questions. The first thing I want to say with regard to what constitutes gross, whether the secondary employees should pay, whether the employees below the pay threshold should pay, and all those questions, those are administrative questions. And as you know, this is not a KRA legislation. It is owned by the State House, the State Department for Housing. And therefore, we are working with them to give a guideline on all those questions. As for now, the only thing that KRA can guide on is the collection, because that is our mandate. So let us give them a chance. They will be engaging us shortly. I know as soon as, very soon, let me not give a date, but I know we are working with them and telling them that the questions we're getting and we want answers. With regard to, I had seen some questions that we could handle as KRA. There were the ones for filing returns, and someone is asking, do we amend the July return if they had already filed by the 28th? They could not have filed by the 28th because the return is due from 1st of July. Let me just console my environment, it's a bit noisy.
Jocelyn, sorry, I think we lost you there. Let me just give you an opportunity to unmute. I think you should be okay now to comment.
Sorry, I muted because I wanted to control the noise in my background. Sorry, so
Okay.
I muted and
It's
you
no
couldn't hear me.
Yes.
So I was explaining about filing the returns. There are people who are asking, do they amend their July returns? Yes, you'll need to amend by the 9th. Busola, you can clarify whether if you had filed your original return, you can amend any time of the month. But we know the housing levy is due when the return is due, that is the 9th. Therefore, you need to, if you had not paid and you're paying, you need to pay within time to avoid the penalties. I have seen a question on someone asking about their house help, and I have responded and said, if you want to pay for your house help, then you must register as an employer, because to file the PAYE return, you must be registered as an employer. So you register as an employer, then you'll be able to remit the housing levy for your house help. Then
Just whether you've seen this question by Samuel, asking whether secondary employees should pay housing levy.
now, secondary employees, we will guide also in the guidelines, but my thinking should be there should be an arrangement between the primary and the secondary, because if we did both employers deduct, how will this person get a refund? And like you had David explain, this tax doesn't come to KRA. That's why you're doing a different PRN for paying of the housing levy and the NITA. So this we will guide on how it's going to be, but I think there needs to be an engagement between the primary and the secondary employer so that they decide who is deducting. And then how will we know who's your primary and secondary employee if you don't tell us? If suppose we employed you and you're a secondary, how do we know that you are your primary? And those kind of questions will come in. So I will answer what we can answer as KRA, then I'll leave the others to housing so that we give a unified answer and in writing possibly. Yeah.
Thank you, Josephine. I think let me just pick out a comment here from Duarte. In the interest of those that are filing their returns by tomorrow, and they are asking in terms of the guidance, just as you've come from saying, guidance on the gross earnings. I think given their predicament, because Duarte is saying that we need, or rather they need to await further instructions from the Ministry of Housing, and yet the return filing deadline is tomorrow. So for such taxpayers, in your capacity, Josephine, what would you tell them?
What I would advise, maybe what we can do, by end of day, we can send on social media something, because I'm not sure we're able to send an official communication by end of today, given the dailies are out today, maybe tomorrow, but we can see if we can liaise with housing and we send something on our social media.
Thank you.
Otherwise, use your interpretation of gross, and we know gross is everything.
All right, let me just drop in. Can I drop in a CPA Robert just to weigh on that, on this matter? Robert, thank you so much, Josephine. I'll be back with you in shortly. Housing levy and the matter here. Can you hear us, Robert?
Yes, I can hear you. Can you hear me?
Yes, I can. Would you want to weigh in on what Madam Josephine has just commented on?
Yes, thanks for that, Brenda. So just she's brought out some very, very important points there, because, for example, KRA is really just an agent, and I think it's important for us to clarify the basis of that agency. If you look at the Finance Act 2023, it brought in sections 31 capital B and 31 capital C to the Employment Act. What that tells you is that there is previously a 31 capital A. And if you look at that 31 capital A, it came in 2018. That's when remember David was saying that the housing levy first came in, and that 31A is the one that laid out the legal basis. Where is this money to be paid to? Who is the beneficiary, and so on and so forth. So if you look at that provision, it's the reason why State Department of Housing and Urban Development is the beneficiary of this fund, and it's on that basis that they have now appointed KRA to collect. So the point that Josephine is making is so important, because secondary employees, ideally, in my view, and I agree with that, should not be paying additional housing levy, because they're already paying from their primary employer. So to my mind, they should not be paying twice, especially now that it's not going to be refundable. In terms of whether it's, what is the base? Unfortunately, the law is very, very unclear. Remember, first of all, this levy is being imposed under the Employment Act. Now, the Employment Act does not define what gross pay is. In fact, it doesn't define what wages are. However, it goes on to say that the monthly levy payable by the employer and employee shall be 1.5% term of the employee's gross monthly salary. Now, if you look at the way these two terms have been used ordinarily, gross versus basic. Basic is this is your pay. Then now we give you some benefits, some allowances, and so on and so forth to get to your gross pay. And in fact, if you look at, I think there's some guidelines that have been issued for the public service around how much employees are supposed to go home with in terms of after the deductions. Those guidelines actually do make a distinction between gross and basic. So basic is what is outlined in your contract as your cash pay, and then now you've got your allowances and so on and so forth to come up, and your benefits to come up with your gross pay. So based on that, my view is that housing levy is on everything that you earn, meaning your salary, your allowances, your benefits, your allowances, anything that goes into your total taxable pay. So that is your gross pay. And even the way iTax has been configured, I've seen that it's on gross pay, which means that you would still be taxable on your other benefits. And that's really unfortunate, because it's very unfortunate that I'm getting a housing benefit, but I'm still also paying a housing levy on that housing benefit. I'm getting a motor vehicle, but I'm also paying housing benefit on that. It's really, really a punitive tax, Brenda. Brenda?
All right, thank you so much, FCA Robert, for that, and also Josephine. I just want to bring your attention to the chat box. We have an email address where we are actually able to direct the question on housing levy to the Ministry of Housing. This email has been shared out for us to use. That is ipdu@housing and urban. I think yes, should be clear now, and I hope you can hear me clearly. I'm sorry for those that were mentioning about my audio, but I think you should be able to hear me now clearly. Forward your question to ipdu@housingandurban.go.ke, including the question by Assumpta here, who's asking that does the housing levy apply to terminal use and matters to do with casual workers? I think both Josephine and also Robert have touched on that matter. I just want to bring in David very quickly, still on the matter to do with housing levy. Ndwati has a question regarding those that are using passports and the fact that the passport number is alphanumeric. David, in terms of, yes, I think you should be able to speak now. Those using passports, yes. Please comment on that. There are questions arising.
I think, as I mentioned, the original delivery of that sheet M of housing levy, it was back then in 2018-19 when it came in as a contribution. And back then, that contribution was only available to, shall I say, citizens, because the government was trying to help its own citizens to. So when it was a contribution, even the dynamics were very different, because only people with national IDs were allowed to register in the Boma Yangu portal, and they're the ones who are supposed to qualify for the affordable in the get houses under the affordable housing scheme. But now in the Finance Act 2023, this thing has been changed so much that now it's more of a tax applicable, and the only thing we are talking about is 1.5% of the gross salary. So again, the exception, and that's why I mentioned some of the enhancements we are working on currently is to make the ID field to be not to be mandatory. Probably by the time you are filing the August return, you'll be having those changes. But having said that, again, for the people who are having passports, just capture the numbers only. all passports are alphanumeric, so you can just pick the numbers of the passport for the sake of declaration for now until we make the field for the ID not mandatory. But for now, just pick the numerical values of the passport, because most passports, even if they're alphanumeric, it could be B12345H. So remove the B and the H, remain with the 12345 in the middle. Okay. And then Brenda, I think on the
Yes.
I may wish to bring another even allow me to bring some other dimension on the issue of secondary employees, because I think again it's not a very straightforward discussion, because David, I may just be a secondary employee of one employer only. Yes, I may be let's say a board member of KRA only. I'm not employed in any other organization, and that's why it may not just probably be. Yes, I understand where my other two panelists are coming from about, but again, you might actually have secondary employees who are not primary employees anywhere else, and probably it may be unfair to. Now I'm being the devil's advocate. It may be unfair to exempt such secondary employees from housing levy, yet there is another primary employer, a primary employee who's earning $1 million and is being taxed, is being deducted housing levy at the rate of 1.5%, and the employer is matching. But there is the other secondary employee who is earning the same 1 million. He is not a primary employer, anyone in any other employer, but we are exempting them from paying housing levy. So I think probably we really need to do a lot again to just ensure that there is fairness and equity between both primary and secondary employees. Okay.
Thank you so much, David, for that response. I'm reading your sentiments in the comment section, like Francis Kiama, and I just want to read this comment so that you can appreciate the discussion that we are having today. Francis Kiama was asking the question: kindly advise how to file and pay for housing levy for employees. These are expatriates without PINs, like it does for PAYE in the last sheet, David. It's something that I think you should be able. Sorry, I muted you by accident. Yes, now you should be able to.
Okay, I'm
speak.
good now.
Yes.
Brenda, the issue of expatriates, as much as we provided that field in the pay return for pay deducted from employees with no PINs, it should not be the business as usual. And I can assure you, if you have an ID, you should be able to get a PIN. If you have an alien ID, you should be able to get a PIN. Even if you don't have the alien ID, KRA can still give a PIN using a passport and a work permit, or a passport and a special pass. So we should probably not be having so many cases of expatriates in courts who don't have PIN numbers, because ideally when the expatriate lands here in Kenya or is engaged by a Kenyan employer, the first thing they need to do is to get a work permit. A work permit probably may take maybe 2 weeks or a month, or I'm not sure how efficient now immigration is, but it should take the shortest time possible, and KRA should be able to issue a PIN within 24 hours of you providing, or up to maybe 48 hours of you providing all that documentation, which includes letter of introduction from the employer, a copy of the passport, a copy of the special pass or the work permit, and probably if you're staying here for more than 3 months, probably an application for an alien ID, not the alien ID itself, an application. So realize there is so much efficiency on the side of KRA to issue a PIN. So again, we should not be having these expatriates in courts who are always not having PINs, because that was not the reason behind us providing for that field. That field was supposed to be used at most probably for 1 month. Then you get a PIN and you come back. And having said that, again, there could be sufficient reasons or very valid reasons to why probably someone doesn't have a PIN by the time a pay return is being filed. And again, that's the conversation we are even having within KRA, and also we'll be having it with the State Department. And in the course of this month, some pay changes you're going to see probably are going to take into account of this. And we're asking ourselves, do we go with either, should we have maybe passport or PIN as the unique identifier for housing levy, and not probably both? So again, it is a conversation we want to start having, or should we just provide, there's the other option even exploring, should we just allow the employer to file with the employees with PINs only, but when they go to generate a payment slip, they edit the amount upwards. So again, that issue will be addressed by the end of this month. By the time they're doing the next filing, we should be able to address that issue. Whether we'll address it in the return, or we'll allow you to edit the housing levy payment upwards more than what is in the return to take care of employees with no PINs, I think will be picking the best delivery and solution for your employers probably by the end of the month. And the pay return should be able to address those things probably come September, about by the time you're filing the August return. Okay.
Thank you so much, David, for that. I want to welcome Josephine is about to give us her closing remarks. But before Josephine comes in, just a question to FCPA Robert. The question here is that, is the housing levy mandatory for non-Kenyans but are residents for tax purposes? Question by Joseph.
Yeah, that's a very good question, Joseph. My reading of the law, 31B, the qualification is an employee, whether you're resident or non-resident. And this is quite unfortunate because you can imagine somebody from maybe the UK contributing to your housing levy here. But the way the law is worded is an employee. We really don't, the law doesn't care whether you are a resident or non-resident. For as long as you are featuring somewhere as on somebody's payroll, then you will definitely be subject to this one. And I think, Brenda, there's also been quite a number of questions around casuals, whether they should be subjected to this. Again, the broad definition of an employee, for as long as this person is an employee, and including, you're treating them as an employer, probably you're providing certain benefits which make them employees, then they will also be subject to housing levy, and you as an employer will also be subject to contributing the matching contribution for that. Brenda?
Let's continue, Robert. One other question, Leonard, is housing levy applicable to people earning less than 20,000?
Yes. Now, and I think that question from Leonard is coming in from the threshold for PAYE. If you're earning 24,000 shillings, then effectively you don't pay any PAYE. However, this levy applies to everybody. In fact, if you've got somebody who is earning even 10,000 shillings, they will still pay 150 shillings, being 1.5% housing levy. So it doesn't matter what your threshold is. It has no lower limit, and certainly it has no upper limit, like you saw in David's presentation. So the higher you earn, including for bonuses, by the way, because I've seen people asking whether bonus payments would be subject to that. It is part of your pay. Therefore, by definition, it will be subject to housing levy. Brenda?
All right, I see the questions streaming in and we want to pick them up. I see Mary is asking, is housing levy an allowable deduction while calculating pay? Well, should that be pay or income tax? Rob?
Yeah, so and I'm happy that the communique that came from KRA clarified that that is a tax deductible expense because it's part of an employment expense. As an employer, if I pay my employees, that is part and parcel of the cost of doing business. So I would expect it to be a tax deductible expense when I'm determining my taxable income at the end of the year. As an employer, as an employee, this is a levy. It's just the same way that you pay, NHIF, for example. NHIF you paid from your net pay. You don't get a deduction. It's not like you before you're taxed you take that deduction. No, this is you're funding it from your cash pay, and that's why it's so punitive, especially for the benefits. So for employees, it's not a tax deductible expense. For employers, it is an employment expense, just like salaries, and therefore you can deduct it. Brenda?
Thank you so much for that response. I would have welcomed Josephine to just comment or give a comment on the current ongoing discussion. However, she has very critical meetings that she has had to go to attend to, so we might not have her to comment, but the conversation is ongoing. We are not done yet. You will appreciate, this is to our taxpayers, that the current conversation regarding the housing levy is a conversation that is ongoing. There are deliberations that are high level that are ongoing regarding this matter. So it's very important for us to have this discussion so as to see the emerging issues. The kind of questions that you have posted here are very, very important. I am also informed that we have some members of the housing levy just following through this conversation so that when directives are given or direction, it will take into consideration this point that you are raising. I want to still bring in David, and then we go back to Robert. Somebody is saying, David, that once they filed their pay return, the housing levy part did not reflect in the acknowledgement receipt. Would you want to comment on that?
Thanks, Brenda. Okay. Maybe I think I'll be more concerned. Yes, the acknowledgement receipt, probably because we've been adding various things, probably the housing levy appearing on the acknowledgement receipt probably may have dropped out. I haven't seen the new one, but I think I have one I did yesterday, but I did it in but I can try check that. But the main issue should be is the housing levy component under the agency revenue. I think for me that should be the most focus, not necessarily on the acknowledgement, but is it available under agency revenue housing levy? Acknowledgement, whether it has it or not, especially it being an agency revenue, probably may not be the main issue. I think the main issue is if you go to agency revenue under housing levy and you select the period, is it populating? And even I think just on that again, Brenda, allow me again just maybe to where I think I agree with Robert, because it is not, and we are not agreeing because we are sadists. I think it's just how the law was. And I like it when Robert, who is an KRA person, is actually taking, Robert, I'm not sure if taxpayers, but I think it's good to speak the truth anyway. This housing levy, the way it is, I think it's the way, even how an employee is defined. When you go to the definition of an employee in the Employment Act, it takes care, it is even mentioned all those details relating to casuals and all those guys under indentured learners. So the conversation is so wide. So the issue of whether, and as much as we are waiting the conversation from State Department, I personally believe housing levy is applicable to both cash and non-cash benefits, is applicable to both resident and non-resident employees. It's applicable to both primary and secondary employees. If you really, that's my own personal interpretation of the definition of an employee, and now you tie it with gross salary. I think when you put them together, this thing is applicable to everyone who is being paid a wage or a salary, whether you are paying them through a payroll, whether you are paying them through a petty cash account, whether you are paying them through M-Pesa, whether they are earning 5,000, 100,000, it doesn't matter. We are not seeing any exceptions relating to the housing levy, but it would be good to have those clarifications from the State Department. Okay, back to you, Brenda, maybe for my other clarifications. Okay.
Thank you. I have a question here to direct to Robert. I think you will realize sometimes you're revolving around the same questions, because administrator here is asking, the 1.5 paid by employers for housing levy is 1.5 of what? We've talked about it extensively, but I'll give an opportunity to FCA Robert to clarify. I don't want to let David go because we're still on the question of filing and paying. Mark is asking that he made a mistake while he was generating a payment slip after filing his returns. He paid for PAYE and housing levy together. Now he's asking, how will he go about it? He didn't select the option of agency revenue. Yes, I have to come back and unmute David. Yes. Oh, sorry. Yes, now you'll be able to comment.
Actually, I was not muted. So anyway, the aspect of course, Robert will be coming in, but 1.5% is on the gross salary, and that is what the Employment Act provides for, and that is even what the guidelines by the State Department are providing, and also that is what the guidelines by KRA, the public notice by KRA and State Department for Housing, or the Ministry of Housing have provided. So it's 1.5% of your gross salary. I think that one is clear. What is probably not clear is what is this exact definition of gross salary, which I've seen even other people proposing that the Employment Act has defined what basic salary is. And from the definition of basic salary, you can arrive at gross salary. So again, I think there is a way of maybe how you can now derive the definition of gross salary. But I still agree with Robert. Gross salary is both cash and then cash benefits. And if, basically, it's For a layman's language is more of just that gross salary as per sheet B and C is the gross salary applicable to housing levy. You've added, for now, I think without further unless you have probably more clarification, but I tend to agree with Robert that it is both cash and non-cash. Now, for the guys who have paid housing levy together with PAYE, that's a mistake. Now, those are two different payments. If you understand government accounting, one is an exchequer revenue, another one is an agency revenue. Those things don't meet at any one point. Exchequer revenue, if you overpay, you go through a refund process. Refunds have to be paid through the consolidated. Also, that's all business is there. So for you, basically, you'll have to seek a refund from KRA on the housing, on the overpayment you did on housing levy. Is either you can go, you can presume probably you can maybe pursue the refund of tax paid in error, and that component relating to housing levy can be refunded to you and probably mapped to you. You generate the housing levy PRN, and when applying for the refund, probably refund of tax paid in error for PAYE, which iTax allows. Once it is processed, the two can be aligned. Or, but I may still prefer probably even as you apply for the refund, you probably may just need to find new resources and pay the housing levy as you pursue the overpayment with KRA. I think that's probably the best because yes, your refund has still not been ascertained, so we cannot even say that it's a valid refund. So even before the commission ascertains your refund, the best way is you pay the housing levy liability afresh, then you pursue the overpayment with KRA. Okay.
Thank you so much. David, let's continue with the questions. Okay, Robert, let me bring you in. Rebecca is saying, considering that the housing levy is tied to PAYE, how will they generate the payment slips for those who are not in the payment bracket?
I
Yeah.
think, oh, sorry. Oh, Robert. Oh, that's Robert, not me. Sorry, Robert. Please go. Sorry.
Well,
I
David,
will get you back, David.
you know,
sorry.
okay, Brenda, yeah. So I imagine that David needs to provide a solution where people who are not, you know, they don't get hit the PAYE threshold, and therefore they will not feature in the return. So that there's no mismatch, and when they come to audit us, they don't start giving us a lot of problems. But let's be honest about this conversation. This housing levy is very, very punitive, because it's very problematic because of all these inconsistencies and lack of clarification. Somebody's asking whether on terminal benefits there'll be housing levy. Is it a monthly pay that you're making for that month? Yes. If it's monthly pay, then you'll have to pay the affordable housing levy. Somebody else is asking, what if I have a mortgage? Do I still need to pay the 1.5? Unfortunately, you do, because it's pegged to your monthly pay, and it disregards whether or not you have a house, or you have 10 houses, or so on and so forth. So it's very, very, very punitive. Somebody else is asking, okay, I've got and these are live scenarios. I've got somebody who's left employment in July. I had already paid them. So what do I do? Unfortunately, I think the practical thing to do there is just pay the housing levy and try and cover it from the employee, because if you do not, remember there is a 2% penalty, which is quite punitive. It's 2% per month or part thereof that you are late. And noting, and this is something, Brenda, that somebody else had picked up there, perhaps in the next cycle of changes, we need to align these due dates, because now you've got NITA that was due yesterday. No, not yesterday. It was due on Friday. Then you've got PAYE, which is due tomorrow. Then you've got the housing levy, which is due on 11th, because that's 9 working days after the end of the month. It's also very confusing. So if we can have just one due date, so that taxpayers just make one payment or one submission, and then now the different payments, I think that would be better. Brenda?
Thank you, Robert. David, please come and comment on the question that you had started answering.
Oh, there. I think I hold a different view, because the pay return the way it is, you can still declare an employee you are paying 10,000. That's okay. The pay return, even as we speak today, takes care of that scenario. And what we've been having is some employers have always presumed that the pay return is only for people who are earning above 24,000. Then even they run into troubles with KRA when KRA does data-driven and intelligence-based checks where they are comparing salaries and wages. And of course, now, yes, you might have that explanation, but KRA is already on your premise. And also, again, now we are looking into other things. I can assure you, again, we'll always find other things which even were not bringing us there. So to avoid this business, just capture all your employees in the pay return. The pay return itself will determine if someone is liable to pay or not, because the moment you allow an employee a personal relief of 2,400, then by default all employees are earning 24,000 and below, they will not contribute or they'll not be deducted any payee, but you'll have done a proper declaration. And when you do that again, then of course the same employees, you should also be able to pay housing levy for them. So I think this aspect that employers have always assumed the pay return is only for people above 24,000. Probably I hold a different view. The pay return is for all employees. We are paying a wage or a salary, and the return itself will determine if someone is in the pay threshold or not, depending on the formulas which have been put in the pay return. Okay.
Thank you so much, David. I want to acknowledge those of us that are following online. I'm sorry, I'm told that the capacity maxed out at some point, and we have many of us who are streaming live from KRA TV, our YouTube page. Thank you. And they are actually asking questions. I've gotten quite a number of questions here from those that are following online. The likes of Stephen, Pakiro, I see Mustafa, Nixon, Swale, Beatrice. They are following us online. And the questions are similar to what it is that we're responding to. But I want us to also talk about NITA, because we're talking about pay. There are a number of questions to do with NITA. And I just want to ask them quickly. FCPA, Robert, one question here. Are secondary employees required to pay the NITA levy? For example, the board members, are they supposed to pay for NITA? And then one other question on NITA. There's a question here that is asking, I filed pay and paid for it, but I wanted to file for NITA housing levy. Sorry. Okay, maybe I might need to take that question again. Nixon, your question is not very clear. Maybe you can respond to that one in the meantime, even as I get more NITA questions for us to comment on.
Yeah, thanks for that, Brenda. So my view is that yes, even secondary employees are required to pay NITA, and the reason is this: if you look at the Industrial Training Act, the reason why employers pay the NITA is to facilitate training of their employees. So the fact that I am employed by two people means that I can actually be trained, or the authority can finance my training for two different courses for my two different employers. And so for that reason, both the primary employer and the secondary employer will need to pay NITA for their respective, shall I say, employees, even though it's the same person, because then they can actually accrue the benefit from the two different employers. David, I think that's been my interpretation. I don't know whether you have a different view.
Robert, I think I fully agree with you, and I've been privileged to be running with this NITA issue even since it was for many years, I think from around 2020, and I think I hung around NITA guys until nowadays. I always tell them I think they need to make me their secondary employee. Oh, then I start being paid at 35%. Anyway, for NITA levy, for sure, NITA levy is applicable to secondary employees. And even the example, and I'll give you guys maybe even another example. Like KRA recently appointed board of directors. And this board of directors, some of them are coming from private sector, some of them are running their own businesses, some of them are officials in treasury. So yes, why is now, because NITA levy is not a benefit for the employee, and I think we need to separate the two. NITA levy is not like NHIF. NHIF gives a direct benefit to the contributor because you are the one being deducted. On the other end, NITA levy is a contribution by your employer on behalf of the employee. And then when you go for trainings, NITA will not ask for the list of the employees who are in the pay return to say that, okay, this one was not there. Meaning, NITA will be guided by the total contributions an employer has done by 31st December, and it will now train the employees for that employer, including the secondary employees. So even for the KRA, our new board of directors came in. They needed to be taken through how KRA functions, probably skills on corporate governance, on board oversight, on accountability, transparency, monitoring and evaluation. All these things, KRA can actually seek a training from NITA, and once it is approved, KRA can train its board of directors, and NITA will reimburse the. So again, the benefit is to the employer, and that's why NITA is applicable to both resident and non-residents, primary and secondary employees, casuals, part-time employees, all those, as long as you are paying them a wage or a salary. I hope that's clear. Okay.
Thank you, David.
Brenda,
yes.
Brenda, there's just something else. Allow me to address something on. I think we've already captured this. Someone is asking the people who file pay returns before 28th, and I think we've already mentioned even when we started this sensitization that the effective date of the housing levy is as per the two public notices by Ministry of Housing and also by KRA is 1st July 2023. Of course, the public notice could not go into the details and saying that you need to amend. That becomes very minute details to put in a public notice. Public notice is just supposed to be the general information. So with that, by the way, then it means if you file the July return without housing levy, then whether because the KRA and even Josephine mentioned that the court did not set a new due date, then we go with the due date for housing levy as 1st July, meaning your July return should have housing levy. And if it didn't have it, then you need to amend it. And now how you're going to fund the housing levy, probably for me, I see it two ways. Is either you go into the pockets for now and you pay the housing levy, then you recover the housing levy from the employees, or you find probably other administrative measures. Maybe you still amend the return, then wait to deduct the employees, but now you may be late because housing levy has a penalty of 2% per month. So again, with anyone who is not going to pay housing levy for July by 11th August, which is the 9 working days, I believe, Robert, you've calculated the correct working days. If it's by 11th, if you don't pay the housing levy for July 2023, then you start accruing 2%. And that is a penalty for late payment. So I think, I hope that addresses the issues the people had already filed before without it. Okay.
Thank you, David. Before you go, Caroline is asking, please, can iTax allow organizations with branches to pay their own NITA? The system does not allow modifying amounts to be paid.
I think NITA, I believe we'd already resolved the issue of branches, but if they still having, because it's not about NITA allowing branches, NITA is being paid through the pay return. So it is more of iTax allowing branches. And I believe iTax allows branches to declare NITA levy with their pay return. And also the NITA levy is supposed to be paid through the branch, so that if branch 1 declares NITA levy of 100, that NITA levy is only visible to the branch 1. And maybe the headquarters. Headquarters can see all the branch pending liabilities, but the respective branch profile, when you log in with it, you should be able to see their 100. If that's an issue, they can just post in the chat their PIN, or rather they can share with us directly. I believe the person with the issue can share directly with maybe the taxpayer education team, and we can get that PIN and probably analyze. But at iTax allows branches to file pay returns with NITA, and it will also allow them to pay NITA levy at the branch level. Okay.
Thank you, Robert. Let me bring you in quickly. A user is asking, how will one do their annual returns, noting that the pay rates are different? Please clarify. This is from Martin Nderitu. And Winja is also asking, people dealing with donor funding. I'm not sure exactly, Winja, whether this question is clear, but she's asking about those dealing with donor funding. Is the question in relation to housing levy, or maybe you can clarify your question, Winja? And then this is what I want you to comment on also, Robert, the matter to do with their third rule.
Okay. Yeah, thanks for that. So let's start with the question around filing returns. I think what's going to happen if KRA has already not done that is that when it comes to filing your return for 2023, you'll have to disclose incomes separately. So up to June, there'll be a separate sort of computation, and then July to December there'll be a separate one. And this is not the first time they'll have done it. Remember in 2020 when we had the reduction in the rates, where you had to disclose your income for the first 3 months and then for the next 9 months because of the change in rates. So that then, for example, if you earned 1 million in June, you see the maximum tax rate there will be 30%. But if you earn the same in July, then the maximum tax rate is 35%. So they'll have to be that distinction. And I think it will be a complex return, which just means that we all have to start filing our returns as early as possible come 2024. Then in terms of the question around donor-funded programs, I think the question, usually most of these donor-funded programs are very specific about about funds not being used to pay taxes. And if that's a question, the employee contribution really, that because it's coming from your pay, that's not a problem. I think the problem would be the employer portion. For example, you've got a donor-funded program, which is very, very clear that the taxes will not be, those funds will not be used to pay any taxes. I think the employer bit may have a bit of a challenge there, and one needs to look at the agreement in place so that you're clear that you're not utilizing those funds to pay taxes, because remember that contribution is by the employer. Now, and the 1/3 rule, Section 19(3) of the Employment Act is very clear that an employee cannot go home with less than 1/3 of their basic pay. So one of the things that we have been advising our clients and taxpayers that in general is even as you do these deductions, please just make sure that, and especially for those of us who had paid their July salaries, you had not deducted, but now you need to recover that. You just need to ensure that you do not breach Section 19(3) of the Employment Act, so that even if you need to recover, then you need to spread that over a period of time. However, you also need to be careful not to spread it not to recover it over more than 3 months, because then KRA will be on your case around giving the employee a quote unquote interest-free loan. So it's a very, very delicate balancing act there for employers. Brenda?
Thank you so much, Robert, for that. Wow, the questions are streaming in. I don't know whether we are at liberty to discuss this. Robert, in your professional opinion, there's a question here by Titus Munyaka. Maybe you can just give your views. Titus is asking you, Robert, in your views, what's the effective date of the Finance Act 2023, considering the precedent set by the High Court about conservatory order?
Yeah.
You think it's something that you can comment on, or?
Yeah, I can give you my view, which probably some people will hold a different view. Now, the first thing to state here is that it was quite sad that the Court of Appeal did not give directions around the implementation of the effective date. In fact, if you read that ruling, paragraph 46 of that ruling, one gets the feeling that they would have gone ahead and said, therefore, the act is effective from today when we lift the orders. I think that should have been the logical conclusion of their finding. However, it just kept quiet. And so the question that we're all asking ourselves is, when is the effective date? Now, unfortunately, the judiciary cannot make law, and the law has already been made by Parliament with an effective date of 1st of July. So we have no option but to go with the legislated effective date of 1st of July. But that's it. I think, and we were hoping that Revenue Authority was going to come up with an administrative workaround around this, because, for example, if you take withholding tax, I paid somebody maybe on the 2nd of July. Of course, I never withheld within the 5 working days, and I never remitted it. So why should you impose a penalty for me, yet the court had already stopped the implementation of this law? You see, that's a question that we're asking. So we think that ideally, Revenue Authority should waive those penalties and allow people to pay the principal tax without imposition of any penalty. But again, we don't live in a perfect world. this Finance Act has also removed the power of the commissioner to waive penalties. So it's a very, very gray area in my view. And I think Revenue Authority needs to give us a bit of guidance about how to do that. I hope they, maybe they are consulting the Attorney General so they can give us guidance about how to deal with those instances. Brenda?
Thank you. Thank you very much. Now, David, I just want to bring you in, even as we are winding up. I think we've had such a very engaging session today. There's a taxpayer here who's asking, to whom will the NITA and housing levy checks be addressed to? To whom should the checks be addressed to?
Thanks, Brenda. KRA is the collector of both NITA and housing levy. So you just address the checks to KRA because those accounts at our over 40 plus agent banks, the name of those accounts is Kenya Revenue Authority. And those are the accounts where you are making the payments to. Because nowadays you no longer have an account specifically for VAT or PAYE. Those accounts, the specific accounts for as per the obligations, they are at central bank, but now the agent banks are having just a collection account for KRA collection account. So just address the check. Different banks guide differently. So I think you can still be guided by how your bank wants you to go about it. But at the end of the day, is either you address the check to your bank or you address your check to the KRA collection account at Stanchart, KCB, Gulf, Corp, ABC, and then of course, because a check is just an instruction, debit this account and credit the KRA account. So that should be, don't address it to the State Department because you are not paying to the State Department. You are paying to KRA, who is the collector, who will later move the monies, the funds to either State Department or NITA for the respective levies. Okay. And then
David,
I think,
sorry?
Okay, maybe just before you come, Brenda, just allow me again to just weigh in on the ITR for 2023 will be ready. You cannot file an ITR for 2023 before 1st July 2024. So the ITR for 2023, the income tax return and the income tax non-resident returns for 2023 will be enhanced in such a way that they'll almost have a similar implementation like the one for 2020. And I think Robert has explained that. So there will be a field for January to June, which it will apply the all pay rates. And then there will be a field for July to December, which will apply the new pay rates. But anyone who is earning less than 6 million in a year, or whose income will be 6 million in a year, both from employment and other sources of income, basically the income in the return, will not experience these new changes. Whether you differentiate the January to June and July, you'll not have hit at any one point probably the 32.5 and the 35%. But those guys who are earning above that, their total income will be above 6 million, then it will be taxed accordingly at the extra 32.5. If that income is it was earned between July and December. For the ones whose income will be coming from business income, then for them we'll still apply the same implementation we did in 2020. For them, it will now, for business income, we don't allow them to capture it will now be presumed to have been earned or accrued evenly over the year. So then they'll just have the same bands apply. And so if you're having a business income of 10 million, there'll be nowhere to say that my income before June was this, and but for employment income, we'll have those two separations, or rather two distinctions between January, June, and July, December. Okay, back to you, Brenda, maybe for the next question.
Thank you so much. Even as I ask you, David, to start preparing to make your closing remarks, we are coming to the close of our discussion today. I want FCA Robert, Jimmy Kinyanjui is asking, have we addressed if the new tax rate for those earning above 500,000 and 800,000 should be factored in the amended returns for July, and additional tax remitted on the same by 9th August? Jimmy is just seeking that clarity.
Yeah.
Robert. Oh, okay.
Well, yes. So, yeah, David. Jimmy. Those updates have been done in that worksheet. So if you make an amended return, you should be able to see the new rates. But David, we have to challenge you because I think when you're doing the the return for 2023 next year, as a businessman, you clearly, I mean, I earned my money throughout the 12 months. The least you could do is prorate it and say up to 6 months, you'll tax me at 30%, because if you tax me at 35%, it means that if I made all my money, you know, there's some people who make all their money in maybe one contract in January or February. You cannot then tax me at 35%, and I can clearly demonstrate that that income has been earned in January. So, you know, I think you guys need to, David, please lead that charge and do something about it on behalf of taxpayers.
David, you have a right to reply.
Robert, you know, this issue of tax rates is a double-edged sword. In Corona era, actually, the argument was the other way. You cannot separate the two because the rate was going lower. So I think with the same breath, because in the Corona era, it was like, you cannot tax me at 30%, and yet and even December, any accounting period, whose accounting period, any company whose accounting period was closing after 1st April, they qualified for 25%, even irrespective whether the bit which was earned after 1st April was the least. So I think the guidance we've got from, I think we'll still engage our policy team, but the guidance we've already got from policies for business income, we presume it was accrued evenly. But again, it's something which we can still engage, Robert. We can still engage offline together with our policy team and find better ways. But I know that bit of 2020 will still come in. It's like that bit, guys were comfortable with the one rate. Then now, I think it's something we can pick it up. Brenda, something again, just allow me to, before you come to your next one. Yes, we're having an issue with the amendments of PAYE returns for branches where and I think branch filing is having a lot of chaos, which we are trying to see better ways of how we can probably change that, how that module works, because the best way branch filing works, and maybe this is for all employers who have branches, please note the best way branch filing works is all of you to file, then all of you start paying. This aspect of some people start paying, then filing, it kind of messes up because all the branches, they still, as much as we provided different logins for you to file and pay, they still come back to the same ledger of the mother. But having said that, so we're having some issues with some branches amending their returns because the system is requesting them to declare all the other payments, including even the ones for other branches. And that's an issue we are probably currently dealing with it. But going forward, I believe there'll be no need for amendment. So the ones which are being stopped by an amendment, please share it with your tax service office that you're having this challenge. Let it be logged and probably you are issued with a ticket. Then from there, when it comes to probably the issue of penalties, at least there'll be a valid reason that you are not able to amend a certain return. But going forward, I think from August, you should just purpose to file, or probably the July return, if you've not filed, purpose to file the return correctly with both housing levy and NITA levy so that you don't need to come and amend again. Okay.
Thank you very much, David, for that. I think I want us to just go through a quick run through of some questions that need clarity, and then we wrap up. But I want to welcome FCA Robert. I know your time is up. Maybe you can give us your closing remarks, your closing sentiments. Robert?
Yes, thank you, Brenda. It's always a pleasure speaking to.
And David, just your screen is still being shared. Let me just inform you. Thank you. Please continue.
I'm sharing.
Yes, David, you're sharing us your WhatsApp, chats. And we know where you get your t-shirts.
Makosa kubwa.
Yeah. So anyway, so David, I agree with that point around accruing evenly, because if that's what policy guided, then my income accrued evenly through the year. So half of it is at 30%, the other half is at 35%. So please have a look at that. But for our audience, it's unfortunate that we don't have that guidance around the effective date. But now I think, given the way the law was worded, yeah, David is gone. Now we cannot see it.
Thank you.
Yeah, so I think it's important that as far as possible, try and pay, because those penalties, when they are imposed, unfortunately, they cannot even be waived. And in fact, even for housing levy, it's even worse, because the penalty imposition is under the Employment Act, which has no waiver provision. Forget about the Tax Procedures Act. So my recommendation is, as far as possible, try and make the payments, even if you're going to recover from your employees in the next couple of months, so that you avoid those penalties. But let's also continue watching what happens. I think the hearing of the case will be on September 13th and 14th. So hopefully by the end of September, we'll have a decision, and who knows, maybe some of these provisions may be declared unconstitutional, in which case then David will have to think about how they are going to refund people those monies. Thank you very much, Brenda, for having me, and have a good day, everyone.
Thank you so much, Robert. Let's just appreciate Robert. If you can give him a thumbs up, give him a like emoji, hand clap. Let's appreciate him and the views that he's given us. I know he has to drop off this call now because of another engagement, but indeed, yes, thank you. I keep them coming. Robert, these are for you. Thank you so much. We appreciate that you made time to join us. Like I mentioned, Robert, I just wanted to read out his profile for those of you that might have missed it, and you will see him also in various local media stations. Robert is a partner at Ichiban Tax and Business Advisory, LLP. He has over 19 years tax experience, including international experience. He's an advocate of the High Court, also the current chairman of ISPAC's Public Finance Committee. So, you know, we had a very able panelist. We are hoping to have you more, even moving forward. So Robert, please receive our appreciation. Thank you. Now, Karibu. So we are just closing. David, that leaves me and you in this sensitization to just to wrap up. Margaret, I know you had given clarity regarding where to address the check. She just came back with a follow-up question, just said, is it in order if I addressed the checks for NITA and housing levy to the Commissioner of DTD, of domestic taxes? I think that's the clarity that she wants. And then before you comment on that, I just want to pick a few questions from our very dear listeners who've been following us on the social medias, on the live stream. Wakina is saying that I'm currently trying to file and pay, that is the pay return. And the question is, what should I fill under the member number and member name if I only have the KRA details? David?
Just repeat the last one. At what do I capture under the member name or ID?
Member number and member name. I think she's referring to the housing levy bit.
Okay, just maybe repeat the whole second question, the last bit.
I'm currently trying to file a pay return, and my question is, what should I fill under the member number, this is, and member name if I only have the KRA details?
Okay, let's start with the housing levy. They probably at some point I'd also mentioned the whole genesis of why we're having the member. It is the member, you realize it's the member number or ID number. So basically you can capture the ID number of the person, you can capture the alien ID if they're non-Kenyan residents, or you can capture their passport number or any other unique identifier number for them. But I think those three should be able to apply for all the different types of employees you have. So you can capture the ID number under the first column, the ID number, or the alien ID, or the passport number. For the passport number, you may probably need to drop off especially if those passport numbers are alphanumeric. Other countries have numeric passport numbers, others have alphanumeric. If they're having alphanumeric, you may probably drop off the alphabet and remain with the numbers and just capture the passport number. But you are going to make that option not mandatory going forward. So that is a bit of and the name is just the name of the taxpayer. So again, probably if those names are confusing, I'll just pick that as feedback, and probably we amend it to just name of the employee, or so that it is very clearer than the member name, probably so that people are wondering who are these members. But basically, the member ID is the ID number, the alien ID, or the passport number of the employee. The member name is the name of the employee whom you are paying housing levy on. On the issue of checks, again, and I think someone has already answered around that issue. There are some banks which insist that you address the checks to their name. So again, I think there are two ways about it. If your bank is open with it, you can address the check to the commissioner, domestic taxes, you can address it to the KRA collection account, or if your bank has any other unique instructions around checks for KRA, please abide by them. So I think for checks, there is really no, we can't say there is one size fit all for how you address checks. Either it starts with how your bank has guided, or if your bank is open, then you can address it to Commissioner Domestic Taxes. Others, I can see they accept you address it to the KRA collection account, because the name of that account in any of the agent banks is KRA collection account. So I think whichever option works for the taxpayers should work. Okay.
Thank you. Thank you. Let's proceed with the questions. There's one, Esther Muridi here. She's saying, I'm trying to do an amendment on housing levy. What will happen to the payment that I had paid? Because she says there's no column. Let me just get that question clear. Just a minute, Esther. There's no column on credits. That is Esther. And Charles has a similar question. He's asking, what happens for housing levy where an employee is a foreigner without a KRA PIN? Previously, we were declaring the pay under employees without KRA PIN section. Maybe you can comment on both.
Okay, I think the issue of foreigners and expatriates with no PINs, I'd already explained that we provided that field in the pay return to just, it was more of a stopgap measure, maybe for the first month this person has just maybe arrived in the country or has been engaged by an employer here in Kenya, and probably they're in the process of getting a special pass or a work permit. But I personally don't see why an employee should continue having a PIN from the second month, because with a special pass or a work permit together with the passport of the employee and a letter of introduction from the employer, KRA should be able to issue a PIN to this expatriate or this foreigner within 24 hours or at most, let's say 2 days. So again, there should be no reason to why we are keeping these people in our payroll with no PINs. For the first month, I agree. Maybe there could be delays in getting a work permit or special pass. But after that, I think it is now probably the responsibility of the employer to pursue the PIN, liaise with the employee, and they ensure KRA gives them the PIN. But for now, two things again have happened. I've told you in the course of this month, we are looking into possible enhancements to iTax to either allow those employees to be declared in the pay return or allow the employer to edit the housing levy amount upwards to take care of the housing levy relating to employees with no PIN. So again, whichever option we are going to have it, I believe probably we'll be doing probably another similar training towards maybe the end of this month. Then we can be able to address which exact implementation we pursued, whether it is allowing employees with no PINs to pay housing levy in the pay return, or allowing editing of the housing levy liability once you've uploaded a return with housing levy for people with PINs only. But when you go generate a payment slip, you can edit the amount from 100,000 to 120,000, and the 20,000 will now be the housing levy deducted from employees with no PINs. Okay.
All right. Thank you. Thank you so much. Wow. I think we might not be able to exhaustively deal with the number of questions that are coming in. But I just want to,
Brenda,
yes, David?
just one more.
Yes.
There is this, the people would already use the wrong return, which was still the sheet M of the housing levy as per the Finance Act, I think 2018. If you'd already used that return, which was capping housing levy at 2,500, you will still be required to amend and use the new payee return, which does not cap. But what happens is, when you file the amended return, your amount is already with the housing levy. So you'll only be coming in to pay the difference. So there is nowhere you are going to claim the housing levy amount paid in advance as per the original return. So this one applies to anyone who is making amendments and the original return already had housing levy. So you'll not, there is nowhere you'll be allowed to claim the previous housing levy, because that money is agency revenue and has already gone to the principal, which is the State Department. But what will allow you, when you file an amended return which has increased housing levy, you will only pay for the difference. So I hope it also just clarifies again on how, because some people had already filed with housing levy, but using the previous implementation, which is different from the Finance Act 2023. Okay.
Thank
And
you
also,
very much,
Brenda,
David.
and Brenda, also I agree. You know, this engagement with on housing levy is the new engagement, and KRA is working with the State Department for Housing to find more clarification. You know, at some point we might probably have the answer, but again, as Josephine said, this is not a levy which is KRA is the enforcement agency or the implementing agency. We are only a collection agency. So at some point we allow the principal, who is the State Department for Housing, to come in and give probably further clarification. Then we have a consensus, then we share with employers. So I think you realize some of the issues we are packing them for the State Department for Housing, and also for them, some of these things are also tax related. So even if they were there in this meeting, probably they'll not have given straight answers, because again, they need also to understand tax, the housing levy from both the Employment Act angle and also the KRA angle, and some clarifications KRA might give even on how we are dealing with other agency revenues, and even how they are being calculated, and it may guide you to the consensus. So I believe the next meeting, probably in the next 1 month or so, towards the end of the month, we'll probably have a representative from the State Department for Housing, and also by then we'll already have clarity on all the issues, the gray issues which have been raised. But the ones who are filing, you interpret the act to the best of your ability, given the comments the panelists have given, and I'd rather you go with caution more than this is not the time probably to stretch your definition. You'd rather probably get it wrong on the first month, but get it right after the clarification, rather than you get it wrong. Rather you get it right on the first month, rather you probably overtax. Okay, that's just me. Probably if you're not sure, you tax it to the best of the ability. Maybe if it's on gross, and you pick a conservative interpretation of what gross salary is, so that when clarification comes, and maybe now you are told you overpaid, it is easy, rather than the other way where you took a lower, you charge it on a lower base, and then now clarification comes and it says gross salary includes all these, and now you'll have to pay an additional penalty of 2% in addition to the underpayment. Okay.
Thank you. Wow, we can go on and on. We are already 13 minutes past our stopping time, but considering the weight of the matter, it was prudent for us to just give as many people as possible an opportunity to ask their questions. I think we've also received some suggestions here. There was one suggestion from Peter Motuko. He was saying, David, I recommend that KRA talk to NHIF and NSSF so that you guys can have additional sheets M and N. This will enable statutory collections easier through one channel. Just taking your comments there. I also see a comment here. I think majority of these questions have been responded to. Okay.
Okay. Okay.
Okay. So I think we want to close it at this point. Just looking at the amount of questions that we've received. What we will do with the questions that we have collected, we are in consultation with the team from the Housing Levy. So we will try and, with guidance of our corporate policy unit, try and make responses, or rather FAQs available for us. Majid is asking, this is the last question, and then David, you can make your closing remarks and we can call it a day. So he's asking, therefore, so what happens to employees who have got no KRA pins for housing levy? I think you have just come from commenting on that. What should we do, having in mind that the deadline is tomorrow? So please, respond to that, David, and any other question that you feel is important for you to comment on, as this is your last comment, and then we will bring today's discussion to a close.
Okay. Again, I think we'll still go back. If you are engaging a Kenyan who has an ID, even if by the time you're engaging them, they didn't have a PIN, please, applying for a PIN with a national ID is automatic, so you can still request them to provide you the PIN. But going forward, the employers need to have a better know your customer. They need to do better in knowing their customers, because any supplier, any employer, any contractor you engage in, part of the bare minimum you need to get them is their ID number, their PIN numbers, and all those relevant minimum details which identify them. I think those should just be the package of onboarding an employee. You must have a PIN, you must have an ID number. If you are a Kenyan, you must have an alien, maybe if you're a non-Kenyan resident. But for the expatriates, again, I've already explained the process is very efficient and they can apply for a PIN. But having said that, the pay return as we speak today does not allow you to pay for housing levy for someone who does not have a PIN. So probably they can go with the ones who have PINs. Then once we probably do some enhancements in the course of this month, they can now pay for the additional housing levy relating to the employees with no PINs. Or once we engage the State Department, we'll probably again give guidance. If the State Department wants to provide a different avenue for collecting housing levy for these unique scenarios, which probably we may not advise, then they can also advise. But for me, I think that can be the best, that maybe the 1 or 2 employees you couldn't pay, once probably we allow the return to capture people with no PINs, or we allow you to pay more than what was the liability of housing levy in the return, it will still address the issue. Someone has asked if you remove the alphabet from the passport number. You know, it's just the number was put there was just for identification purposes, but it doesn't necessarily mean, and that's why even we want to make it optional going forward. So if you're making it optional going forward, or we are now providing, is either we'll make it optional going forward, or if State Department for Housing still requires those unique identifiers, because passports keep on changing after every 10 years. So I don't think passport is the best even document to probably keep on because in 10, 15 years, someone may not be having the same passport number. But anyway, if they still insist on having the unique identifier for the employees apart from the PIN, we'll then make the field alphanumeric. So again, I think the options are many to KRA on how to address that issue. But for this 1 month, for the people with passports, remove the alphabet and capture the member number without the alphabet for the sake of filing. I think for me, my closing remarks is just thank you everyone for joining the training, and we hope the next training will, as Josephine had already indicated, we'll already have had quite a number of engagements with the State Department, and there'll be much more clarity on the exceptions, if any, and basically some of the definitions and interpretations of some various terms, and we should be able to share this information with the employers probably in the next training which you're going to do. And also for employers, we keep on having a monthly training organized again in conjunction with NITA. I believe another one will be coming end of the month. So you can also again purpose to join, just in case it will not be together with the housing levy one, but I can advise probably Brenda and team, this time we can loop in the NITA team so that we have a joint training between NITA cover some technical bit on NITA, then probably someone from State Department or for housing or KRA cover some technical bit about housing levy to just again unpack it, and then now someone else covers the iTax filing and payment for PAYE, housing levy, and NITA levy. I think it would be a wonderful training to have for employers. Okay, thank you very much, and back to you.
Thank you so much, David. Come on, let's appreciate David. He's done a tremendous job. I see the appreciations coming in. Majid is saying, thank you, David. I got it. Let's give him our hand claps, rounds of applauses, the thumbs up. Thank you, Florence. We see that. Thank you. Let's appreciate him. Sylvia, thank you. I see even those following online. I really appreciate him. The likes of Winnie Kamau, Mwege, Tivenda, Joy Ichoho, Felix Magana. These are people that are following us online. Lucy Kanunu, and I know we had quite a big number of those following and actively asking questions. Wanjiro, Lilian Wamoyo, Nate Mboro, we appreciate you. Thank you very much, David. I know Stephen Chege, your hands are raised. We may not be in a position to continue with the conversation in terms of responding to the question. Stephen, I see your hand. However, what you can do is that you can get in touch with us with your question. Thank you very much. Margaret says that the session has been very informative. Kenneth says, mention the names of the panelists once more. Okay, we had David Busaule here with us. For those who might be new to who David is, maybe let me just give you his bio very quickly so that you understand who we are talking about. David is a business process improvement specialist for compliance management and external integrations in the Business Transformation Office. We call it BTO office. Just in simple terms, these are the guys who deal with the ITAC system. And he's also an assistant manager at DTD. He's very knowledgeable. So that is, David is one of our panelists. We also had with us along the conversation, Madam Josephine Mugure, who is the current Chief Manager, Corporate Policy at the KRA. Now, Madam Mugure and her team are the team that are in charge of matters to do with the Finance Act, and it was important for us to have her on board. And then last but not least, we had with us Robert Wariru, who is a partner at Ichiban Tax and Business Advisory Limited. We brought him on board because of his vast experience. He's also an advocate of the High Court and the chairman of ISPAC's Public Finance Committee. I think their poster is somewhere we had shared it for those of us who might not have had an opportunity to see them. Those have been our panelists for today. I want to just, I think I should share this so that you can be able to see. Yes, I think you should be able to see. These have been our panelists for today. That's Robert right there, Madam Josephine right there, and David right there. So I hope you can still hear me clearly. I want to bring our attention to the links that are useful for us. Catherine is saying, thank you for the training. Mohammed is saying, thank you for the informative session. There's one other person who's saying, Brenda, I joined late. So yes, the information is available on our KRA TV site. The link, let me just share the link shortly with you. Remember, we also have an email for the Housing Levy Ministry of Housing team where you can actually get to directly ask questions to them. We will be posting it on our chat box shortly, so kindly stay tuned for those two links. For those of you who are having challenges with filing your amended return, for those that had already filed their pay returns, remember that we have a very able team at the call center. The details are on our KRA website, but you can reach them through, I'm just posting on the chat box. So you can send in your queries to our various platforms. That is the call center. You can call us as well through the numbers available on our KRA website. You can also get in touch with us on the chat box. Thank you for your questions that you have asked. David did make a very good comment towards the end of his closing comments. He mentioned about bringing on board all these agencies together to make our engagements more fruitful. In fact, some of you suggested that next time we should have representatives from the housing, the Ministry of Housing to come and also help us tackle questions to do with housing levy. Very well noted. And also NITA, stay tuned for more such engagements. We will have them every Thursday. Remember, we have our tax Thursdays happening from 11 a.m. That is consistent without fail. The links will be sharing them out on our social media pages. And I think from myself, Basile Muteli is saying, thank you for such an informative session. Faith Mano is saying, thank you for the training. In fact, she says we need more of this. Thank you so much, Faith. Nancy Kiki is saying, thank you. We gained a lot. It's very good to know. CPA Sami Mutua is already asking, when is the next training? Be sure to stay tuned to our social media pages. We'll be telling you when the next sessions are coming, but mark your Thursdays at 11. Those are consistent. Every single Thursday at 11 a.m. we will be having training sessions as this. So thank you. I want to ask you to subscribe to our various socials. For those, yes, subscribe to our various social media pages. We have our KRA TV, which we are posting we're posting the links for you. That is for KRA TV. That is for our Facebook page as well. And also for our live stream that is found under the KRA website. Alex Anyona, thank you. Thank you so much. Nicholas Moridi. I think David is able to see the appreciation that's coming from our taxpayers. They are very grateful for the session that we have had today. Remember, I'm told by our social media team, subscribe, comment, like, and share. Thank you. Thank you so much, Roslyn. Thank you so much. We appreciate also for your time. I will just end with a word of prayer and then leave the session ongoing briefly so that we can put the useful links on the chat box, and then we call it a day. So let's pray. Father, we thank you for the session that we have just had. Thank you for the clarifications. Thank you for our very able panelists. Thank you for the questions that have come through. Thank you for the engagement. Even as we are looking forward to more such sessions ahead, I pray that you would continue going before us and help even the various departments that are in charge with offering clarity to our taxpayers to be able to listen to them, and also, Lord, that we may be able to give useful information and help out where we are required to help out. We thank you, Lord, and we bless your name, for in Jesus' name we have prayed. Amen. So thank you, everyone, and have a good morning. I almost said afternoon, but a good morning. Thank you.